Scott Gecas there at the edge of the trading floor at the CME Group in Chicago here with us. And Scott, what do you think of this market here today? A little bit of a rebound for the soybean market. Is that enough to maybe put a little bit of a lift for corn and wheat, you think?
Right now, I don't think so. And the only reason why I don't think so is because the volume is really light. The volume has been light pretty much since last Wednesday. We had a little bit of a shortened trading day last Wednesday. We expected lighter volume, definitely lighter volume on Friday, just everything with the holiday and all that. But everyone that we've been talking to, they're going to be focusing on Thursday's report. So with the USDA report coming out with those extreme numbers, a lot of people that we've been talking to are very much in disbelief that those were real numbers. So we're going to have to wait and see how this report's going to react. Volatility remains high. You're seeing a little bit of option flow on both sides of the contracts, calls and puts. For corn, you're definitely seeing a much larger premium built into the upside calls. That's only due to everything that's been going on with the weather and all that. The 14-day forecast is expected to be a little drier, a little bit warmer. So that's definitely going to put a little bit more stress on those shallow roots with the corn. So that's what we're looking at as far as what the options are looking at as far as these markets right now. But until the volume picks up one way or the other, you're really not going to get that big of a good idea of that direction.
Scott, you think this afternoon's crop condition ratings may bring out a little bit more interest in this trade, or you think that everybody's going to wait till Thursday?
Well, I think it's going to bring out a lot of interest into it. And the only reason why is because the Midwest did not get as much rain as it was expected. We had much drier weather than as expected. So, that could play a different role into all these crop conditions. And so we're going to have to wait and see when that comes out later today after the close.
All right, Scott, we'll take a break. And when we come back, we'll talk about what's going on over in the livestock trade. A little bit of pressure all the way across the board there. We'll be back with those details right after this. Scott Gecas still at the edge of the trading floor, this protein complex. A lot of weakness here today. There's been a lot of folks talk about how these charts look for the hogs and where we're going to go from here.
Yeah, with the hog market in particular, it's weird because you have the fundamentals are completely bullish. You have the African swine fever. It's completely out of control. They're saying enormous effect. They're saying it's going to take a decade for China to recover from this. Whether or not that's true, we're going to be able to yet and see. But they still continue to buy U.S. pork. So even with these high tariffs, the only drop off is that Mexico, we're not importing, or they're not importing U.S. pork. So that's where you're getting a little bit of a give and take, and that's why you're seeing a little bit of bearish pressure with the U.S. pork market. So until we can get some kind of definitive move one way or the other, it's pretty much trading sideways, but it's really odd that the deferred contracts are having a lot more pressure than the front months. So that's a little bit odd. It's a little concerning, but we have to wait and see how, if these tariffs come off a little bit, just like everybody else says, and everybody else is waiting for it. If we get a drop in the tariffs, we expect those imports and the exports to pick up dramatically. So we have to wait and see how that's going to play out.
Scott, is the trade talking much here lately about what they're hearing as far as those tariffs are concerned?
Well, that's one of the odd things. This is one of the first weekends, and it was a long weekend, that we didn't really hear too much trade war talk. We didn't hear too much one side or the other. The president didn't tweet anything about tariffs or anything about talks going positive or negative. It was really odd. So we have to wait and see how that's going to play out. But that Trump effect is always going to be in center spotlight as far as the protein complex, just because of the import and export tariffs. So we're going to have to wait and find out.
Last week we saw, basically steady, maybe a little bit stronger cash cattle trade. Any ideas of where we could be aiming this cash cattle trade this week? Because we've started the week out here with weaker futures anyway.
Yeah, and one of the reasons for the weaker futures in the cattle market is because you had a 5-pound spike in the cattle weights. That was considered bearish, and that's why you're seeing it a little bit under pressure today.
Okay, Scott, always good to check in with you. I hope you have a good afternoon there at the edge of the trading floor.
You too.
Scott Gecas, he is with Walsh Trading in Chicago.